Today I want to share with you 10 lessons I learned from trading the markets for over 10 years, making and losing millions, growing the money I managed from just around $900 to around $35 million, doing over $1 billion in trading volume in the last 2 years alone, and being named one of the top crypto fund managers several times throughout the last few years. This decade of my life, which encompasses more than a third of the entire time I've been alive now, has been filled with ups and downs, times losing millions, making millions, going through situations like FTX and countless other experiences that simply you can't learn from books. Looking back, I wish I'd known these lessons I'm going to share with you today, because they could have saved me millions of dollars and even accelerated me way further into the future. And since I wished I had that sort of mentorship earlier on, I want to share these lessons with you so that hopefully they accelerate your path as well. So let's jump right in. Number one, and this kind of goes before you even ever start trading, is look, it's gonna take a lot longer than you think. I know when you look on Instagram, there's a lot of gurus promising that you can make a ton of money trading this year, this month, today, but the reality is it takes a long time. And one of the main reasons for that you need to master is building up your bankroll. Your bankroll is essentially a term from the poker world, meaning the money that you're working with that you will be placing bets with. Because look, if you have $1,000 to your name, on average, the S&P 500 makes about 10% a year. So if you match the market, 10% on $1,000, that only makes you $100. You definitely can't live off of that. And even if you scale it out, let's say you saved up $100,000, right? 10% on $100,000 still only is $10,000. That is not something you can full-time live off. And so one of the most important things to work towards if you want to be a trader, and if you want to do this full-time, is building up your bankroll. And that takes a lot of humble dedication, takes years and years and years and years, whether it is you consistently adding to your account every single month, or if you do want to build an investment firm. When I first started Hartman Capital, it started from my bedroom with 2 roommates with about $217,000. And so you have to start small. And the first few years, I literally didn't make money off of it. And so I was living on lentils and rice and really simple stuff while running a hedge fund. So the glory and the awards, they come down the road. But you have to commit yourself that, hey, the next 5 years, the next 7 years, they might not look like the movies. And that's part of the journey. Number 2, trading is a survival game. Look, I've seen so many people blow up account after account after account. If all you do is stay in the game, you will probably do way better than most people out there. Because most people believe that there's this scarcity of good trades, good ideas, and they see an opportunity and think, I have to place everything on it, because what if nothing like this ever comes back? And the reality, after 10 years of doing this, there is no shortage of good opportunities. But the place where people mess up is that they misidentify one of those, place everything on black, everything on red, and they go bust. And so your number one job, after having built a bankroll, is to make sure you actually stay in the game. And this goes even beyond just, having good risk management. It also goes for looking for your blind spots, because the reality is you will never be perfect. Even today, I still make mistakes, right? It was as recent as last year where I unfortunately lost quite a lot of money on FTX. That was a blind spot that I didn't see coming. And so now I actually spend a lot of time thinking about future-proofing my investment style and reducing my risk of ruin to zero, where I think about what could go wrong. Because so many times beginners, they only think about the ways to make money, but they forget to think about what could go wrong. So it's super important that you always make sure you stay in the game. Let nothing ever take you out of the game, because as long as you live to trade another day, you will see new opportunities. Number 3, you must love probabilities. Something I see a lot of beginners make, and you will see this when you go on social media, you see these videos where people say, oh yes, Bitcoin must go to $60,000. That is exactly where it's going. An actual expert will never say that. Instead, they deal with probabilities. They say, you know what? Based on the data we looked at, there's maybe a 60% chance that is going to happen. But, maybe there's a 30% chance it goes somewhere else. Now, you got to add another probability on top of that, which is the probability that you're wrong, right? Because nobody has the perfect, probability set. We're all just making up these numbers essentially. But all you have to do in trading is be right essentially 51% of the time. If you can be right 51% of the time and have good risk management, you will win over a long period of time. And so you have to start loving probabilities and really think about investment opportunities and trade ideas in the way, well, what's the probability that I'm right? And then maybe what's the ratio of how much can I make, how much can I lose? And start loving the math behind it and construct your portfolios and construct your trades in that way. That is one of the most common traits I see amongst successful fund managers that have stayed in the game and won over long stretches of time. Number 4, you must always cultivate confidence, but battle your ego. Those are two traits that people oftentimes confuse with each other. Some people think that confidence is ego. Some people think that ego is confidence, but those are two completely separate characteristics. Why is it important to cultivate confidence? There's been so many times in my 10 years of trading where I had the right idea. We came up with the right token to invest in. But for some reason, maybe I was scarred from a recent bear market. Maybe I just lost money on another trade, and then I didn't have the confidence to execute upon that idea. I was waiting for more validation. Maybe I wanted to hear other people say that this is a good idea. Maybe I wanted to see the market say it's a good idea by the token going up in value. But then I would miss the opportunity instead of actually having confidence in my thesis and in my ideas. And that has lost me a lot of money along the way. Now, on the flip side, there's ego. You see, just like the way maybe a long stretch of losing trades makes you confident stuff and makes you miss out on a good trade, sometimes having a long string of winners boosts your ego so much that you think you're infallible, that you think nothing can go wrong and all your ideas are made of gold. And so then many times you take on more risk. And by you taking on more risk because you think, hey, I've never been wrong, I'm always right, that's when you have these huge setbacks that will give back all the gains you just made, and which is why so many traders are living this endless loop of having great stretches. They give it all back. They start back at zero. They do it over and over and over again. So you must always cultivate your confidence, but battle your ego. Number 5, you must always make up your own mind and not try to copy others. This is again one of those things you see most common amongst beginners, where every single day I can open my DMs and somebody's saying, what are you trading? Everybody wants to copy. Everybody wants signals. Everybody's looking on Bloomberg about, what are famous traders trading? But the problem of that is that you don't have the same context. You don't even have the same portfolio construction. You don't even know when are they going to exit. And ironically, this was something I learned extremely early on, luckily, because that was one of the most common sayings that the legendary traders in the book series Market Wizards talked about. They all said the most amount of money I've usually lost was because I followed someone else's word. And so you have to get good at forming your own theses, putting confidence behind your own ideas, and not simply going around copying what other people are doing. Because why would they know better? And I know why many people fall for this, because they want to delegate away responsibility. And so if you really want to make it in this industry, you can't just go around delegating away responsibility. You have to take responsibility in every single trade you make. And so let's say you actually do find somebody that has a good idea. And let's say you do copy that trade. The second you copy that trade, that was your trade. If it goes wrong, you can't go blaming them because you're the one that pulled the trigger. And so you have to stand behind every single trade you put on. Number 6. If a trade makes you feel uneasy, or let's put it in clear terms, if a trade keeps you awake at night, you probably put on too much risk. There have been countless sleepless nights. I even made a video about how I need to start following blueprint on longevity practices because I aged so much over these last 10 years because I had too many sleepless nights. And the reality is nearly every single time when I had these sleepless nights, when I kept checking my trading view, when you're at a social outing and you keep pulling up those apps and check, oh, where's the market? Where's the market? Where's the market? Chances are you're in too deep. And so you have to get good at knowing yourself and reading your own psychology and your own emotions and knowing that, hey, if you're too anxious about the market, you probably put on too much risk. And so start listening to that and use it as a reverse signal. If you find yourself overchecking, go sell off some of the positions because it will actually protect you in case you're wrong. Number 7, in reverse, if a trade makes you feel too comfortable when it seems like an easy trade, chances are you're on the wrong side. This is something I've noticed many, many times when it seems like the sun is shining, rainbows are out, and it's just easy. You're putting on your favorite songs because the market is it's going up and you're 100% long and everything's awesome. Chances are you're already on the side of consensus. And that means when everybody is long, when everybody thinks, yes, Bitcoin, your Bitcoin is at $60-some thousand, we're going to go to 100,000. Why not? The problem is at that point, if everybody's already long, and you maxed out every single dollar you can put into the market, chances are you're probably minutes, days, or maybe a week away from the top being in. There's been countless times, and I've started listening into this feeling now more and more where you have this feeling of elation. And so and ironically, that feeling of elation where you feel great and like everything is going amazing, and like you kind of, that ego comes out again where you think like you're so smart. I mean, you just nail trade after trade after trade. Like you're really somebody, right? And shortly after, it's literally days after, for me at least, that so many times your ego gets checked. And so just like you have to listen to your feeling when you're anxious and you think you've put on too much risk, you also have to listen to your feelings when maybe you're a little bit too confident, and that confidence slowly turning into ego, that you might be on the side of consensus, you might be just chasing the easy trade, right? Like an easy trade, for example, that many people participated in was GameStop, where everybody thought like GameStop, it just keeps going higher and higher and higher, and we're all geniuses, right? But eventually, so many people lost their entire life savings on it, right? And if at that point, when you're feeling elated, that even in the movie Dumb Money that covered that specific trade, there was this lady that was a nurse, and she had $500,000 in her trading account, starting with maybe $20,000, and she was flying to Florida, first class, sipping champagne, thinking that, everything's amazing, and she had her money in out-of-the-money call options. And by the time she landed, her account was blown up. So if you ever feel that, if you think you're the Wolf of Wall Street, if you think like you cannot be beat, chances are you're in trouble. Number 8, return distribution is a game of extremes, and you need to optimize for that. Now, what do I mean with return distribution? Across those 10 years, if I had to create a graph of every single trade I've ever placed, how much did they make me, how much did they lose me, there would be a long, thin line where you probably couldn't even tell that 90% of the trades made or lost me anything. They're a wash. You can forget about them. But then there's these few trades, let's call it the 5%, the 10%, the 20%, that both made and lost the majority of my entire P&L over those years. I can count on one hand, there's a few trades that I've made millions and millions on. Like on the left side of the curve, you'll find big ones that I've publicly talked about here, like Terra Luna, where we made around 6 million, or ETH, which we discussed in the last video, where we made around 2 million. And then on the far right side, there's also some big losers, like for example, the Osmosis ecosystem that got affected by the Terra Luna crash, where we also lost quite a bit of money. And then on the far right side, where we have something like FTX, where I lost close to $4 million on. And so your job is to look at this graph and see what can I do to make sure that my biggest winners win bigger, and that somehow you can make sure that you never have this aggressive loss that can ruin your entire return distribution. Because if all you do is allow some positions to become these huge winners and make sure that nothing ever loses too much money, you'll be winning long term. And there's many famous sayings for that. Like, for example, Paul Tudor Jones, the famous hedge fund manager, he once said, losers average losers and winners average winners. So you want to make sure that you add to your winners and you cut your losers. And you also give your winners enough room to let them run. Because a lot of beginners and a lot of gurus out there promote these false ideas. Like, for example, the second, a trade is up 20%, you cut them. But guess what? If every single time you cut a winner after it made 20% or maybe it doubled, you will never have these kind of big returns that really make up your entire return profile. Further, this also teaches you that your job, if you do this for many, many years, is not to find a lot of small winners, but instead to simply keep batting, to simply keep trading, so that you shoot for having one of those big winners. I am okay being wrong. So, there's been many times when I've made bad investments, I've made bad trades. And you know what? I don't lose sleep over them. I don't think about them. It's unfortunate if I lost money on them, but the reality is that was a loss I had to go through and keep trying and keep trying and keep trying until I find that big winner. And that one big winner then pays for 20, 30, 50 of the bad trades. So your job is finding more of the good ones, letting them run, and at the same time making sure that those other 40 remain small. Number 9, and this is something many of you probably don't want to hear. In my eyes, investing and trading is kind of like an extreme sport. It's not for everybody. Because the reality is most traders, most investors, they underperform the benchmarks. They underperform the indexes like the S&P 500, Bitcoin, you name it. And so if you want to partake, because it's a competitive sport, so to say, you need to also put a competitive level of input into becoming the best. So whether that is dedicating hours and hours and hours to learning the craft, whether that is reading books, whether that is seeking out mentors, whether that is just dedicating years to learn the practice. It is going to take time. It is going to take a lot of effort. I fully disagree with the notion that you can just be this casual retail trader that spends, an hour a week putting on some trades and kicking everybody's butt, including Warren Buffett, Bill Ackman, and Ray Dalio. It's just not going to happen. You have to dedicate the kind of hours. And then you have to ask yourself the question, is it something I want? Because the truth is, for most people out there, you're probably just better off putting money into the S&P 500. Trading may just not be for you, and that's okay. But at the same time, if you say this is something I want to do, you better step it up, because if you want competitive returns, you better also be competitive on the field. And number 10, sometimes the best thing you can do is being out of the market. Some of the most costly times in my 10 years of trading were actually when I forced myself to be in the market when for whatever reason I shouldn't have been. Sometimes that might be because you are distracted with some big event that happened in your personal life. Maybe it's because you just didn't have a thesis, you didn't know what to do, but you almost felt this guilt that I got to be on the field. There's been so many times when, you're almost like flailing around. You're like, I don't know how to read this current situation. I don't have an edge. Like we could go up, we could go down. I just don't know. But somehow then, instead of just going flat, meaning sell everything and just wait it out and see what happens, you kind of force yourself to no, I need to. I'm a trader. I must trade. I must be on the field. And the reality is, if I hadn't done that throughout my life, I would likely had reduced what we just talked about, this return distribution, reduced the amount of big drawdowns that I had. Because the truth is, a market like crypto is 24/7. That means for the last 7 to 8 years that I've been trading crypto, Bitcoin has been moving every second of it. And so many times it's that thing that keeps you up at night, where I check the charts at 4 a.m. I've got alerts going off at 2 a.m., at 3 a.m. because I think, I need to always be watching. But the reality is, either whether it is you dialing down risk, whether it is you going flat when you don't have a clear thesis, or also whether it's you building systems that give you a little bit more flexibility where it is okay to turn off. Because if you want to be in this game for a long term, it's also super important for you to maintain a balance. Because in order to come up with the right ideas, the good ideas, you need a fresh mind. And when you come from a place of burnout, you will usually underperform. And so that's one of the hardest things to master. I've got many friends that are asset managers like me, and so many of us, we've been at this for 5 years, 10 years, 15 years. And one of the hardest things to accomplish is to be able to separate work from your personal life. Why? Because the markets are always open and you can always check. You could be out with friends, but really you're thinking about what's the market's next move? But really you're opening your phone and you're checking, did anything get triggered yet? Should it be, out of something? Or sometimes there's not even anything to do, but you compulsively check regardless. And that is something that I'm still even figuring out, because it's really hard to overcome that, because on one hand, I love it. It's my passion. I enjoy trading. 2, I'm good at it. It's my job. and 3, I have this belief that, the more time I spend at it, the better I'll be. But the reality is, so many times these micro actions that you take are sometimes even more hurtful or more damaging than they can be helpful. You waking up at 3 a.m. in the morning to check how the charts are doing is probably not going to change your bottom line. And if it does, then again, you probably put on too much risk, or you could have done something that could have saved you from having to wake up at that time. So as rewardingly challenging and exhilarating as trading and investing can be, and as much as you might love it and want to spend every minute of the day doing it, try to find ways to at least set yourself up in a way where you can turn off. Because it will be so important for you when the moment comes when you just don't know what to do, that you have the confidence to also say, I'm shutting it off, I'm going back at this when I have a clear mind. Because the biggest, most costliest mistakes happen when you're not in the right mindset. With that, the first 10 years on the book, but they certainly won't be my last 10 years. There's a long journey still ahead for me, a lot to learn. And if you enjoyed this video and are looking for what to watch next, here I'm breaking down a trade that made me close to $2 million, where I show exactly how I came up with the idea, how I sourced it, how I thought it through, and ultimately won it. Or, as we discussed today, maybe you're dealing with a little bit of burnout. You've already been on this journey and you feel like your health has been going weak. I break down how over the last 6 months, I've completely overhauled my health, went down the rabbit hole of longevity to make sure that I'll be trading for the next 30, 40 years to come.